Well, you can start by giving me some friendly advice on how to make money in these godforsaken markets. I got a lot of catching up to do.
Well, Gordon, you gotta look at the bottom line, where the growth is. And I still see plenty of growth in exchange-traded funds.
ETFs? WTF? Aren't they just tracker funds? If that's the best advice you can give to an old pal, then I'm disappointed you learned so little while I've been away.
No, wait, hear me out, Gigi. Even you told me back in the 1980s that it's almost impossible to beat the S&P 500 without information that others don't have.
Your point is?
The point is, Gordo, the market's wising up. People have finally worked out that trying to beat the benchmarks is like running to keep still. After the fund manager takes his fee, you're no better off than just buying the benchmark yourself. With markets as efficient as they are these days, it's too difficult to beat the street. The key to long-term performance is not market timing or stock picking. It's all about asset allocation by the cheapest means, and ETFs are the perfect building blocks for this. They track all kinds of asset classes, benchmarks, baskets, long, short, leveraged, even dynamic strategies, and they're very liquid. And they're cheap whether you're a big player on Wall Street or a little guy on Main Street.
Wait a minute, what's the downside with these things? There's got to be a catch, there always is. I don't want to be the one walking around blind without a cane here.
Okay, let's cut first to the downside. ETFs usually don't track the benchmark perfectly. The ETF provider will want to get paid for putting it together and keeping it tracking what it's supposed to. But as most of this work is automated by computers, the fees are minimal. There may be a bit of tracking error too, but again, computers keep this to a minimum. Some swap or synthetic-based ETFs can carry some counterparty risk, because some of the time they're not 100% backed up by the assets they are tracking. But provided you're looking to benchmark the more liquid markets, it's easy to dodge those potholes. As long as you check the details, ETFs are simple and transparent with no nasty surprises.
So where's the upside? Why am I still listening to you? And this better be good, as I have a conference call in less than 5 minutes. The meter is running, pal.
There are two stories here. One for the overall equity market, which is the bad story, and one for ETFs in particular, which is a good story. In the equity market, generally, technology and competition have driven down commissions and spreads in a race to the bottom. If margins are being hammered, all you've got left to make money from is volume. In the broader equity market, margin compression was initially offset by higher levels of trading volume. But since the credit crunch, volumes are going down along with commissions. For most equity brokerages, it's brutal, and there's no surprise to see that more than a quarter of the city's white-collar workers getting whacked since the start of the crunch. ETFs are a commoditized product just like equities. The key difference is that volumes are still growing strong in ETFs as investors increasingly want to put together the asset allocation building blocks themselves. Assets invested by ETFs have not only been growing fast in absolute terms in spite of the credit crunch, but they've been growing as a percentage relative to mutual funds as well.
Okay, genius, I'm beginning to see the picture. But how sustainable is the volume in ETFs before it takes the same path as the broader market?
The beauty is that we're not even touching the sides yet. The ETF craze is still sweeping across the world. It started in the US, then spread to Europe, but penetration remains low in Asia. ETF assets is one thing, but what really matters to a brokerage business is trading volume. Even if you take the view that the ETF market volume is starting to mature in the US at somewhere between 15 and 20% of overall equity market volume, Europe and especially Asia still have a lot of catching up to do, but they're headed in the right direction.
Hey, sounds like if you want to make it big in Asia, you should be brushing up on your Cantonese.
其实，现在普通话才是最有用的语言技能。在这一方面，可以说我已经火候了。
You're a fast learner, bud. I always like that about you. It looks like you're onto something, Kimasabi. It may not be as sexy as leveraged buyouts and event-driven arbitrage, but it looks solid enough. I ought to thank you for pointing me in this direction.
Any time, Mr. Gekko. It's the least I can do.
Catch you later, kid. I got to take this call. Hey, Larry. This is a rare pleasure. To what do I owe? How are things treating you in Shanghai?